Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. Okay, the bounce continues. And, I entitled Friday's webcast, in order to sell rallies, you need to sell a rally. Look, rallies are rallies. I mean, you've had a 6 to 7 day band ride, culminating in a news-related reaction low on Thursday night going into Friday. This thing is going to bounce, and it's going to bounce a lot farther than people anticipate. But, coming in and, just blindly shorting a 10 or a 20 handle move, you should be careful. I mean, that's no different than coming in during an upper band ride when we pull back for a day and saying, well, I guess that's the top. I mean, how many times did that work out in the last, 2 years? Once. And so be cautious here about what's happening in the market. I think, from my chart work, the bulls have clear sailing up to the 50-day exponential moving average, which is coming in around 39. The red line there, the 50-day, let me zoom in one, this red line needs a test. Those of you that follow the webcast for any period of time know that we talked about the red line a lot back in April and May when it was support 5 times. If you're a bear and you want to see a change, a true change in the character of this market, you need to turn that red line into resistance. If you do that on a consistent basis throughout the month of August, you will have your correction. You will go see the 200-day exponential moving average down in the 1850s. But first things first. The first thing you have to do is to actually hold a level on a bounce and turn it into a lower high. You haven't done that in years. Well, I shouldn't say that. The last time you did it was in January. And that created this move here. That created this second move down. Then they blew it after that. So what am I looking for today? I want to see what the reaction is when we get up to the 50-day. Now I'm long. I got long 14. We added down at 94. We've got about half that left. I've got to stop at 24. I've got 10 handles locked in on my long, so I'm just kind of letting this ride. It's up 20 handles, right now. So I'm back to I had 14, added 94. I dumped the 94 Friday morning. Too early, but you have to take some profits when you're up that much. So we're back to the original 14 position, and I've taken a little bit off of that, and I've got some left. So then what's left now is up about 20 handles. So it's just a matter of you have to understand you need rallies. Yes, we're in sell rallies mode, but you need a rally, and a rally is not going to be 10 minutes. You may want it to be if you're a short that's been waiting 2 years for a significant down move. But that's not the way this is going to work. If you're a true bear, you want the multi-day rally, and then you want it to fail and make a new low. That's how corrections happen. If you're a bull, you want to do what you've been doing for the last 2 years. You want to V-bottom this thing through the 50, through the middle band there, the green line, because if you close it above 1950 now, above the middle band, then you're going to have, shorts bailing out over the side, left and right, and the squeeze action will take care of the rest up to new highs. So this is a very important week in the market. Very important week. Okay, everybody take care. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I will be back tomorrow morning with another webcast. Trading well, everybody.